When it comes to common sense, I'll go for a little common sense over 10 hours of BS. And one of the things I keep thinking about is what's going on in the derivatives market and how much money is actually out there on balance sheets in the banks. Something I don't understand. I don't understand the derivatives market. I don't really care to understand it. I think it's just going to go bye-bye. It's going to be done. But what my point is, that reality, when these types of values start disappearing because there's defaults on credit by governments and big banks, it will happen. It will happen. The derivatives is the time bomb. The gold miners, and here's a gold miner with a couple little shovels, are not going to be able to keep up with demand. It's an inelastic supply. That's why they didn't. That's why our money's not based upon a gold standard, right? That was the main reason, because the supply of gold is not that elastic. We need an elastic supply of money that needs to be managed. That's the reason, right? Well, what's going to happen when the big derivatives bubble breaks? They're not going to be able to supply the gold that's needed for the financial markets unless the price is a hell of a lot higher. Simple, simple, simple. They've been talking about it a while. Now, you're talking about mines like this, and I think this is down in Chile or something, but, it's one of the types of open mines. They have these over in Nevada, too, in Arizona. And you're just not going to ramp up production double and snap your fingers. That's just what happens. And, of course, she's not going to be able to dig much out with those two little shovels. But what is going to happen, and this is just some basic facts, and this is just the way to look at things, simplicity, because this is going to come about. We talk about the correction period's not over with. Yeah, the correction period's not over with. Just hang on. We're not going into deflation. Right now we have a little bit of deflation, but we're not going into deflation. It's definitely going into hyperinflation. It's just that the money is just sitting on the balance sheets right now. It's not in the economy. It's not turning around in the economy. When that money comes off the balance sheets of these banks, and also say, for instance, China doesn't care to buy any of our bonds anymore, and very recently, I think it was in the last couple of months, they made direct access for China to buy up our bonds. In other words, Goldman Sachs can't front run them. So they're catering to them because they're our best customer. The end game is coming up. It's just a slow thing when you're waiting for water to boil. But this is the boiling of the water. It's the derivatives market. The biggest risk to global finance is the 1.2 quadrillion derivatives market. Quadrillion is 1,000 trillion. Okay? It's complex. It's unregulated. So nobody knows what the hell it is. Nobody. I don't give a damn how many degrees they have. Nobody knows exactly what's in this derivatives market. Its value is 20 times the size of the world economy. So it's designed to be blown up. They're not that stupid. This is the game. So what you need is real assets, and you do need physical gold. You need physical silver, palladium, and platinum. 1.2 quadrillion is the size of the world derivatives market. The annual gross domestic product of the entire world is between 50 trillion and 60 trillion. So the derivatives is 20 times. Now, a couple years ago or so, I had the privilege of working on some things that were pretty wild that not too many people see, and it was of great interest to me, actually. Involved a hell of a lot of money, like a lot more money than you would think is out there, but a lot of it involved derivatives. And the one thing in my mind was that my mind did not think the way the other people thought. If I came up with a lot of money out of a deal or somehow, or got some portion of it, I would put it into physical assets. I would not try to keep it in some derivative in the Cayman Islands or some garbage like that. I think very much on the physical side of everything and stay with the real assets. I think a lot of these people in the financial world, they're going to get screwed big time. They're going to be caught holding straws. Nothing. The short straws. And, I don't really have nothing against Jamie Dimon or anything like that. I'm going to get on with this Global X chart here, but I don't have nothing against Jamie Dimon, Lloyd Blankfein. I know what they're about. I mean, they're slick. They just like playing a game, I think. That's really what the game is. It's it's kind of like what they're bred for, you know? But they're not really in business to lose people money. Trouble is, not everybody makes money. That's the way it goes. You got winners and losers. Yeah, sometimes I guess they do work against their clients because everybody works in their own self-interest. Everybody. There's no exceptions. No exceptions. So I don't really see them that bad. And, I've been pointing out in a number of previous videos about Vladimir Putin. That guy's actually worse in our bankster Western elite. He's actually more cold-blooded. I think a lot of people are running from bad people to somebody's worst. And that's that whole strategy that's Russia's playing. So I want people to be a little more alert to getting scammed over even worse. The best defense you got is staying with the physical metals. Yeah, they're going down right now. I mean, I'm looking at the markets today. They're going down. And even this COPX, which is a global miners, the copper miners, it's a good indication of what's going on in the economy. Not just going by the price of copper, but it's also the mining shares too. But it's been going up since the beginning of June. It's been having a little bit of a rebound. And that's a good sign. And another good sign is the Baltic Dry Index, even though it's low, has been going up. Now you pretty much see this COPX, or the price of copper, also pretty much follow the Baltic Dry Index. That's really what's telling you what's going on in the economy. And things are actually not as bad as you think they are. But what's going to happen is there's going to be something going. I don't understand what's going to happen. I don't want to say because I don't know exactly. But there's something definitely wrong with this equation about the derivatives market and what's going on in Europe too. They're having a whole hell of a lot of time trying to hold out that situation together. And the only way they're going to be able to hold it together is with expanding the money supply and just bailing out banks and stuff like that. People are running scared. And then people are going to start wising up. And they're going to start going into physical gold and physical silver, physical real estate. Basically precious metals are one of the smallest things you can that will not deteriorate, that you can hold long term. I mean, you can go into a lot of physical assets, but the most convenient ones are precious metals. There's no doubt about it. A lot of people are going to wise up to this. I think a lot of people in the financial world that are very trained into, the accounting methods in finance, they're not going to wise up to it. They're going to get screwed. But so be it. That's the way I look at it. But when this bubble breaks, when is that going to happen? I tell you the truth, I don't think it's that far off. One thing Mark Faber says, he was talking about, here's the silver miner girl again, right? He was talking about the U.S. bond bubble. Everybody's running into U.S. bonds right now. He's got a good sense about him. It may not be that much longer before that bubble breaks. When that bubble breaks, where are people going to run to? They're going to run to gold. And gold is an inelastic money supply. Yeah, you're going to tell me they could cheat and they can short it and they can make up paper gold and they don't really have the gold. There is a lot of audits that go on behind the scenes, and I know they can cheat with all kinds of different ways. I'm not familiar with J.P. Morgan, what they do, but I know there's all kinds of ways you can cheat and it almost doesn't look like you're cheating. There's a lot of different things you could do. But still, the money that's in the bond market, it's not going to jump into the gold market. You're not going to be able to cheat that much to make it come to make the supply of gold go up 10, 15 times like inside of no time. And the miners aren't going to be able to mine it. So what's going to happen is the price is going to explode. And I don't think there's nothing they can do about it. Remember, I don't think we're going to go in a situation like we were in the Weimar Republic. But we're probably going to have a situation where gold is going to go like double or something like that over the next couple of years, no problem. But it's going to be explosive. It's not going to be smooth. And what's going to happen is the same thing, almost like, not exactly, because, in Weimar Republic, gold went up 10,000% inside of no time. It's not going to go up that much. because after all, it's the United States. It's a very, very big economy, despite all the different things shipped, industry shipped out of the United States. It's a big economy. It's not going to go down that fast. It's almost like the Roman Empire when it went down. It doesn't go down as fast as people think because it's a pretty big ship. But the one thing I expect, though, is that when it does go down, we're going to see an explosive move in gold. But it's not going to be like the Weimar Republic, but you might see it go up twice, then twice again, then maybe twice again. Those are big moves. Those are huge moves. So a lot of the things that people are talking about, the ultimate price of gold being $8, $10, or $20,000 an ounce, it's going to come about. Because wait till the bond bubble breaks, and then what happens with the derivatives market too. I don't understand what's going on with that stuff. I would never put a dime into any shit like that in a million years. I know there's a lot of people that probably do have money and stuff like that, but I don't understand it, and I think it's all going to go away. It's going to go bye-bye. And when people wake up, they're going to start pouring into hard assets, and then there's going to be a panic. And that's when gold and silver, platinum and palladium are actually going to get ahead of itself. And that's probably the time you should sell and take the fiat money and switch it off for another hard asset. But I think, the inelasticity of gold, the fact that you just can't quadruple the supply of gold like snapping your fingers like you can on a piece of paper, it's going to cause the price to explode. And you're not going to be able to cheat as much as people think. So, just hang on with this stuff. It's going to go up. It's going to go up. And I think it's going to go up this year. A lot depends on what the timetable is for the attack on Iran. That is going to actually have a lot to do with it. Because when there's a lot of uncertainty in the world, people run to gold. And gold and oil tend to run together. They tend to. And when oil takes off very hard, silver's going to start taking off very hard too. That's when the correlation between oil and silver gets pretty good. When oil takes off very hard. It's like when they're sitting at a pretty flat level, there's not a good correlation. But things are going to start heating up. But we need some kind of event to actually make it move. But it will. It will. There's a lot of disrepair going on behind the scenes. And when things actually start to fall apart, it's not going to actually fall apart in reality. I mean, as far as it's going to fall apart for the people that don't have their money invested wisely. People who actually have their money in the precious metals, they're going to hold together fine. Because you can't just double the supply or triple the supply or make the quadruple the supply in no time. Wait till that bond bubble breaks. I think that is coming up around the corner too. Mark Farber has an uncanny sense. And if that bond bubble breaks, where's the money going to go? Where's it going to go? It's going to start pouring into gold.